Hello, guys, and welcome to tonight's show. Today is Friday, October 12th, 2018, and the weekend's coming right up. I hope you guys have a great weekend. Listen, China could do a heck of a lot more. They haven't retaliated yet. Listen, if you had a guy standing there, and another guy walked up to him, and he slapped him across the face, and then the other guy didn't do anything. He just stood there and took it. 2 or 3 minutes more passed, and then he come in and slapped him again even harder. Nothing. Well, that's what's happened with China. The first trade tariffs were launched. It was a slap in the face to China. And it's directly meant to hurt the Chinese economy. Now, Donald Trump's come in again. $200 billion more. That's a bigger slap. That's almost a punch. That's a punch. That's an honest-to-God punch. So let's start the charts right here. And let's take a look first at bonds and rates. The U.S. Treasuries, What we're looking at here is on the U.S. 10 years, 3.167 tonight. Now, this little market crash we just had, I'm not really going to call the crash, call the correction. With these other guys going to call the correction, but it's part of why I called it crash and why I slipped and said stock market crash is because I believe that this is going to be more later. So later on the charts, when you look down the charts like a year from now, you're going to look at this as part of a larger crash later. Even though the stock markets went back up now a little bit, it's only a bounce. This U.S. Treasuries in the 10-year did not go down significantly from the amount that the stock market fell. Should have been down more than 3.167. And it's bouncing back rather quickly. Now, here's the thing. Trump, let's take a look at this article here. He says he can do a lot more to China. In other words, we've slapped them in the face once. We're going to do a lot more. Now we're going to kick them down below, It says, U.S. President Donald Trump warned on Thursday there was much more he could do that would hurt the Chinese economy further. I guarantee you, China's already feeling the pain. Donald Trump is showing no signs of backing off in this escalating trade war with Beijing. It says, despite the rhetoric, Trump and Chinese President Xi Jinping plan on meeting in the G20 summit in Argentina in late November. We're not going to get that far. The world is going to be a frickin' mess by late November. I mean, it's going to be horrendous by the time they get to this G20 meeting. It's all going to start, in fact, it's all starting to unravel, and there's so many problems in the world right now. Now, let's switch over here a little bit, and let's take a look at the dollar versus the Chinese renminbi. Now, they want to label China as a currency manipulator. And the thing is I'm looking at the chart of the U.S. dollar renminbi right here over a period of like 5 or 10 years. And we did see a significant drop. But going along for the last year or two, I don't see where China is really retaliating by weakening the renminbi just yet. There was a little drop right here, but it just looks like normal, more or less normal activity. It's not really a pounding, crushing drop in the price of the renminbi, which they could. That's one of the things they could do is weaken the Chinese currency. And this is one of the tools that they have. This is a bomb that they could drop. This is just one bomb that they could drop, the Chinese. But there's more. But remember, they haven't retaliated yet. They haven't retaliated yet. So this would be a medium-sized bomb, them dropping the prices of renminbi. But now let's look at a big bomb here that they got. But the problem is with this big bomb, with China, is that if they drop this big bomb, it's not going to just hurt America, it would hurt China too. And this big bomb is China cutting its U.S. Treasury holdings as the trade war intensifies. If China drops this one in the trade war, if they drop their Treasury holdings of bonds, then this would be a devastating blow. Now let's take a look here real quick, and we're going to take a look at what they have done, which is almost nothing. It says China's ownership of U.S. bonds, bills, and notes slipped to 1.7 trillion, right? Down from 1.18 trillion. So look at it in dollar terms. Look at this right here as what they own, as say they owned $1.18. Okay? They've dropped it to $1.17. That's an insignificant drop. That's less than 1% of their treasury holdings, right, that they've done so far. That's not really retaliation. Retaliation would be if they dumped the whole 1.8 trillion. I mean 1.18 trillion. That would be retaliation. Or if they dumped, say they dumped a $0.5 trillion of treasuries. Of course, now it would hurt them. I gotta hand it to China. The United States is really pounding them. And China's not retaliating. They're taking it. But the question is, for how long? How long is China going to take this before they retaliate? Now, let's just go over this a little bit. What if they did drop, say, 25% of their U.S. Treasury holdings, which would be around $265 billion that they would drop if they dropped 25% of their U.S. Treasury holdings? What would this do to the bond market? If they dropped, say, $275 billion worth of U.S. Treasuries into the bond market, what would that do to the bond market? A sudden drop in the bond market. Well, this would spike yields in the U.S. Treasury bonds. This would pop all of the bubbles out there. This would pop the real estate bubble, housing bubble. This would pop the car loan bubbles and the cars. This would pop a whole series of bubbles would pop within the economy simultaneously. So the Chinese are actually holding a lot of cards here, and they haven't played them yet. Thank goodness. But how long is this going to go, and how much longer is this going to go before the Chinese do retaliate? And believe me, when they do retaliate, it might take all of us by shock, because at that point, when the Chinese decide to retaliate, I mean, we're already in trouble. We're already just barely keeping our stock market together and keeping everything together. But when things escalate into a war situation, which is what this is actually a trade war. Sometimes people start to feel like they don't really care anymore. They just want to punish the enemy. So if the enemy drops bombs on you and they destroy your economy, in the end, you feel like retaliating, even though it might hurt you back. You're of a point where we got to do this. You feel like you got to do this. And the Chinese, I guarantee you, their economy is starting to hurt right now. And they're saying to themselves, well, America's going to do a lot more than what they've already done. What are they trying to do? Crush us? So Trump says he can do a lot more. So the Chinese might be thinking to themselves, hey, you know what? We need to retaliate in order to try to get in there and win a battle in this escalating trade war. So listen, guys, should prepare. because the thing is the world economy is on much more tenuous footing right now than anybody could possibly imagine. And there's a trade war going on, and there's no sign of a conclusion to this trade war. In fact, it's heating up. And China's probably going to make the next move. And it's going to be something that we don't like. And they're probably already sitting there planning it in China. Now, another move that they have, the Chinese, is gold holdings. I don't believe the West has very much gold, if any. Fort Knox is probably empty. Chinese are holding tremendous gold holdings, probably as much as 24,000 tons. The estimate on the Chinese gold holdings is not near what they really have. Quite seriously, the Chinese could hurt America in another way by just arbitrarily setting a new price for gold, bypassing the COMEX, and they would basically, because the West doesn't have any much gold to sell, basically the Chinese there would be like, they could just arbitrarily raise the price to whatever they want it to be, and they would buy all bids. They'd buy all gold that's out there. They would buy whatever. If you've got it, sell it to us, sort of an idea. And they could do something like that. They could use gold as a financial weapon as well. So the Chinese got a lot of cards, really, in this financial war. It's not like the Chinese are really weak. And our economy, we are basically a bankrupt entity, because we owe $21 trillion in debt, but there's also unfunded liabilities that stretch out over $100 trillion. And so this could become the black swan event that we all been looking for, honest to goodness, this trade war. It might be right under our nose. The black swan might be already here. Prepare accordingly. Thank you guys for listening, and like and subscribe, and we'll catch you in the next show. Bye-bye, guys.